Many traders are looking for something complicated. But sometimes a simple comparison between EMA and SMA and a proper combination with Fibonacci is what makes the profit. Today we're going to learn a precise scalping strategy that combines EMA 12/21, SMA 9/14, and Fibonacci confirmation. But before that, we have something important to learn. Part 1. Difference between EMA and SMA, 1 minute. First of all, we need to know the difference between EMA and SMA. SMA stands for Simple Moving Average. All candles have equal weight. EMA stands for Exponential Moving Average. Newer candles have more weight. The result? EMA reacts faster. It gives signals earlier, but is also more likely to be fake. SMA is slower, but its confirmation is more reliable. So if we can combine EMA for quick entry and SMA for trend confirmation, we will have a precise multi-layer system. In this setup, we use 4 lines: EMA with periods 12 and 21, SMA with periods 9 and 14. These two EMAs cross together and show the short-term direction. SMAs act as a trend filter. If EMA 12 crosses EMA 21 from below and both are above SMAs, buy signal various to sell. EMA 12 crosses EMA 21 from above and both are below SMAs. Now where is the Fibonacci confirmation? When the entry conditions are met, we draw a Fibonacci on the previous move. If our entry point is in the 0.5 or 0.618 Fibo area, it means that our position has strong support. This confirmation helps to eliminate false EMA signals, because we enter only when the price is at a suitable correction level. For example, the EMA has crossed and the SMA has confirmed it, but if the price is at the 0.23 Fibo level, we will not enter because the necessary correction has not been made. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Part 4. Entry and exit conditions. Full version conditions for entering a long position. Upward cross of EMA 12 and 21. EMA 12 should cross EMA 21 from bottom to top at a sharp angle, not horizontal. Shallow intersections usually occur in a neutral market and are not worth entering. Confirmation of position with SMAs. Both EMAs should be above SMA 9 and 14 at the moment of the cross. This means that the market is in a short-term and medium-term uptrend. If the EMAs cross but the SMAs are higher, this means that resistance is nearby and the entry is weak. Confirmation of level with Fibonacci. The entry point should be in the Fibonacci retracement zone. 0.5 or 0.618 is ideal. This means that the market has corrected and is ready to continue moving. An entry at 0.23 or 0.78 is usually unsupported. Strong confirmation candle. The candle that forms after the cross should have a long body, short lower shadow, and relatively high volume. Weak or long shadowed candles, like doji, are not suitable for entry. Entry time. The best time for a 1-minute scalp is usually the first 2 to 3 hours of the London or New York sessions. Volatility is high and liquidity is high. Conditions for entering a short position. EMA 12 should cross EMA 21 from above at a downward angle. Both EMAs should be below SMA 9 and 14. The price should be at the 0.5 or 0.618 Fibo retracement level. Strong red candle, preferably with a short upper shadow. Volume is high or increasing. Exit the trade. Target, between 6 and 10 pips depending on the asset. Stop loss, below the Fibo on a long or above the Fibo on a short. Timed exit. If 3 candles have passed but the price has not reached the target. If the EMAs start to converge again, if the Fibo reverses and breaks, or if the MACD or RSI show a weakness in the trend. Section 5. Real example. Imagine on the 1-minute time frame, the market has entered a short correction phase after a relatively sharp uptrend. The price has started to suffer, but is still above the SMA's 9 and 14. The EMA 12 is approaching the EMA 21 from below upwards, and both EMAs are moving in line with the previous trend, not against it. The corrective candles have small bodies, and the volume was decreasing until the new candlestick increases in volume and forms a long green candlestick that clearly crosses the EMA 12 from below, above the EMA 21. This cross is at an angle, not horizontal, and the distance between the EMAs is increasing after the intersection. The SMA 9 and 14 are both below the EMAs, so the overall trend direction is confirmed. At this point, the Fibonacci is drawn on the corrective wave, from the bottom of the correction to the top of the previous wave, and the entry point is exactly around the 0.5 Fibo level. This means that the price has rebounded from the logical correction and has rebounded strongly. On the next candlestick, you enter a long position. You set the profit limit at 8 pips and the stop loss below the 0.618 Fibonacci level so that temporary noise does not cause you to exit. The price quickly grows by 5 pips in the next 2 candles, but shows some hesitation in the third candle. The momentum has not yet weakened, and the MACD remains positive. The fourth candle comes with higher volume and is targeted. The result? Entry at the right place, multiple confirmations, and logical management make for a fast, low-risk, and profitable trade. This example shows how to enter and exit orderly, even on short time frames. Part 6. Common mistakes. Entering without checking Fibo levels. EMA cross-fakes in a neutral market. Weak candle with low volume. Wrong entry. Not using SMAs as a filter for staying too long in a trade without momentum. Part 7. Auxiliary tools to increase accuracy. To get more accurate scalping signals and avoid false entries, I recommend using the RSI indicator with custom settings as a final filter. RSI is not just an overbought and oversold tool. It can also act as a trend strength confirmer. Set it to period 14 and change the default zones 30 and 70 to 40 and 60. This way, the signals will be more sensitive and accurate. How to use it? Very simple. If the conditions for a buy entry were met, EMA, SMA, and Fibo were all okay, but the RSI was still below 50 or was sloping down, cancel the entry. If the conditions for a sell entry were met, but the RSI was still above 50 or was rising, the signal is weak. This tool helps you enter only when the trend strength is really in the direction your strategy indicates. In other words, the RSI is a final layer of filter to prevent fake EMA signals.